Well, hello everyone. I'm here today with Carrie Smith, Marketing Manager for CBI Group Investments, and I'm David Todd, Vice President of Sales and Marketing. And we're here today to talk to you about a product called Chestermere Lands. This is a relatively new investment opportunity on the Canadian landscape, and it allows Canadians to use their RRSPs to benefit their TFSAs.
Dave, there's so many people that still are unaware of what a TFSA actually is. Could you explain that a bit more?
Good question. And you're right. It's fairly new on the Canadian landscape. TFSA stands for Tax-Free Savings Account. And this was brought in by the Canadian federal government 4 years ago. And there are two big rules that people need to follow when they are investing through or into their tax-free savings account. The first rule is a Canadian can only invest up to $5,000 per year into that account. And the second big rule is that any returns on that investment is tax-free savings account. So the good news is that your investments are going to be tax-free when you get the returns. The bad news is that it's only $5,000 a year.
Geez, that's not very much.
That's not a lot of money. When you're talking to people who are interested in preparing for retirement, of course, $5,000 is hardly anything, right? So even if I gave you a very good return, let's say 20% on your investments, 20% of $5,000 is only $1,000. So somebody that's talking about a retirement planning, this is not interesting to them. However, Chestermere Lands, for the first time, allows Canadians to use their RRSPs. Now, many Canadians have several hundreds of thousands of dollars in their RRSPs.
That's right.
And they can invest through that vehicle and get benefits back in their TFSA. This is what is so unique about this product.
I've never heard of that product before.
Let's talk a little bit about the structure and then who's put the structure together with us. So firstly, let's talk about the structure of this investment. As you can see here from this graphic, let's say somebody was investing $20,000. We would take that from their RRSPs. We would take that $20,000 and we would take 10% of it and put it into the TFSA. So we split the investment into two. $18,000 in the RRSP, $2,000 goes into the TFSA. Over the period of time that the company holds the investment, they will obtain a return called a hurdle rate of 8% back into their RRSP. So that's already a good return. They're getting 8% a year into their RRSPs. But when we all exit this investment, and in these types of investments you exit together, when we exit this, 70% of what was invested through the RRSPs comes back through in the TFSA. So that's a big number. You can imagine if I just add a zero to all of this, and we invest $200,000 because people would have $200,000 in their RRSPs. Upon exit, a targeted 70% of that comes into their TFSA. It would be just short of $140,000. All of a sudden, you've taken that TFSA and made it a major investment tool. Now, this is new and unique in the Canadian market, and people haven't heard about it before. So what we did is we worked with the biggest and the best to bring this product to market.
Dave, who have you chosen to work with on this project?
Good question. It was important to us because this project was new in the Canadian landscape that we work with some of the biggest, the best, and the most reputable firms in Canada as we put this structure together. So CBI Group Investments went and chose Bordner Ladner Gervais, BLG, which is one of the largest law firms in the country that works in this exempt market space, and chose Myers Norris Penny as the accounting firm to work with them. So BLG did all the legal work, Myers Norris Penny did all the accounting work, and we put that together with one of the largest reputable firms in Alberta when it came to the land deals. So those are the two big companies that we work with from a legal and an accounting perspective. And in the same manner, when it comes to dealing with the actual land purchase and the development of the land, we also decided to partner up with one of the biggest and the best in Alberta, and that's United Communities.
I've heard of them.
Yes, they're a huge company here, and they have about a 30-year track record, multi-billion-dollar company, and you can see here on this graphic lots of areas that they've built up, and we decided to put this three partnership together with CBI Group Investments and bring this product to market.
Why, Dave, would you choose land as an alternative investment?
Good question. We know that historically, land has always been a good investment. And the value of land keeps rising, but it's a conservative investment. When you put land in the path of growth, a city is growing and you buy the land outside that city, it goes up even more in value, so that becomes more interesting. But when you start to actually develop the land, that's when the land goes up exponentially. And you can see that here on this graphic, how the developed land has gone up much higher than just the land in the path of growth. So land by itself, good, solid investment. In today's market, in today's world though, land also brings what we call a non-correlated investment into this equation as well.
Dave, as a Canadian investor, why would I choose Chestermere?
Chestermere is a small town located just on the outside of Calgary. Now, most of us would all agree and know that Calgary is one of the premier cities in Canada that's growing. People are moving into this space. So as, of course, the city grows, it consumes more land. And you can see from this graphic that there are towns around Calgary, Airdrie and Cochrane and Okotoks and all these suburbs where land is also being consumed. But in the town of Chestermere, which is the closest town to Calgary, we have a compression that's occurring between Chestermere and Calgary. That land is being consumed, but then the population growth of Chestermere is where all the action is. So you can see from this chart that all the other suburbs around Calgary, those small towns, are also experiencing aggressive growth. But Chestermere, 148% growth in the last 5 years. So the city is just consuming the land around itself and growing towards Calgary. And it's that land in between the two, which is the land in the path of growth, that we are developing. And so as we develop that, that's where the land becomes very valuable. And of course, we're going to be moving into that space, and that's where the investors are.
So Dave, exactly what will you be doing with investors' dollars?
What we are doing with the investors' dollars is we have acquired or purchased 316 acres just outside the city limits of the town of Chestermere. And we're going to be developing that land and putting in 1,200 homes. Now, the investors, we're not about the homes. We're about developing the land, and when the land is ready to be sold to the home builders, as I said before, then we all get out. And that's called the exit in this project. And that is going to happen about 6 years from now. So there's a hold period for the investor, and that's where the 8% into your RRSPs happens. And then when we all exit, when we sell the land to the home builders, that's when it goes into your TFSA. One of the things that people need to understand, Carrie, about this particular investment is that it's not an investment like stocks and bonds where you just can buy and buy and invest and invest. These investments are somewhat closed. In this particular case, the investment is $16.6 million, and then that is all. And right now, we're already sitting at $11 million invested from investors, which means there's only $5 million left of potential to invest in this. And we think that by the end of this RRSP season of 2012, that those investments will be gobbled up and that the investment structure will be closed. So
an investor is interested. They need to really, make the phone call now.
They need to get involved with this. That's exactly correct.
Dave, how would an investor get more information about this product?
Well, there are several ways to get more information about this product. You see the information on the graphic in front of you. There's the 1866 number. There's the email address to cbigroupinvestments.com. But really the easiest way is click the link on the bottom of this screen. It will take you to a webinar that will expand on the information we've already talked about here today.